Good afternoon. Today is Tuesday, the 29th of April, 2008. This is Brian Shannon from Alpha Trends, and the market's closed. We had kind of a mixed market here today. The S&P 500 did finish with a loss of about 65 cents, or about 0.5%, while the Nasdaq 100 was up about 0.75%. The obvious trouble area for this market continues to be this 140 level, and it's not that it's been a major level of contention, but so far we have seen a couple tests in here over the last couple weeks, as it was previously an important level of resistance back here after the January, that initial bounce. And again, above that level, we have the December lows where there's the potential for resistance, as well as the declining 200-day moving average, and the downtrend line that this market has the potential to rally up to before finding resistance. So on the daily time frame, it seems as though, again, the market's expended some good energy getting up to where it's come from off these lows from mid-March, and now, because it is at the top end of the range, it makes sense to keep your risk exposure a little bit tighter, in particular with the Federal Reserve announcing their policy decision tomorrow regarding interest rates. The 30-minute time frame, if we take a look in here, these are the trend lines that I've been drawing in. You can see that this market did get below that 139.5 level that we were looking at yesterday, and not that that's such a big important area, but the market did make a lower low or lower high right here this afternoon, and now it just kind of places a little bit more significance, I think, upon that 138.50 level that we were looking at yesterday as well. Breaking back below 138.50 now would add a lower low to this lower high, and I think that probably puts this market back into a position where it's likely to test this 137 level. Tomorrow is the Federal Reserve meeting, and we get a lot of volatility, so it's possible that the market could get down that low and test that level. So something to be aware of as far as upside goes. If we get some kind of runaway market to the upside, I don't see it getting past about 143, but that's a massive move from here. So we'll see what happens. But let's take a look at this 10-minute time frame. You can see again the potential for a lower high. The market is holding above this 5-day moving average as well. So it just further strengthens the case that you got to be a little bit cautious in here. Russell 2000 continues to find a little bit of resistance at that important $73 level. Or just rather below that $73 level. Bullishly, we've got a rising 10, 20, and 50-day moving average, and we've got these higher lows and higher highs. So, nothing has changed in here other than the fact that we are up near an important level that has been resistance, pretty strong level of resistance in the past. We've got this downtrend line pretty much in the same, area. I think that, a push up through 73 maybe. It doesn't mean run out and buy. It's because it's not the breaking of resistance or a trend line that matters, but can the market hold on to it? So if you're waiting for a move above 73 before you get long, a lot of people wait for a big technical level like that to break before they get long, and then as that move fails, they're stuck with a losing position that they hadn't planned for. So the point is, if you get a break of the $73 level, remember that doesn't mean the end of the work. It doesn't mean that you can buy and hold onto it. You've got to monitor your risk on shorter term time frames, so that if you do find yourself in a position that the market didn't agree with and you have a losing position, that you have the ability to cut the losses quickly, and before they're allowed to like a cancer grow and do more damage to your equity. 71 is a potential important level for this market here tomorrow. So as I've been saying, it's the 71 to 71.25 level, and that 71.25 was actually tested in here today. So again, just continue to be overall cautious. Trading right around the Federal Reserve number, we tend to see huge volatility, and it can be something that really presents too much risk, I think, for the average trader. So just be careful. The XLF, as we saw a couple days ago, broke this downtrend line. It's holding above that downtrend line, but really needs to clear that 2750 area before I think we can see this rally materialize into something larger that might potentially lead to a little bit of a short squeeze. You can see here that initially 27.20, and when we look at the hourly time frame again, we're seeing that this trend line, which had broken, is not holding up anymore, but bullish we are above the rising 5-day moving average, and it just looks like this market is settling in, searching for some support in here. Obviously tomorrow, any downside, knee-jerk sell-off, would want to see 26.20 hold within a reasonable degree of 10-15 cents or so. Perhaps we come down and test this trend line, which is at this point at about 27 or 26 even, so 26 to 26.10 I think. I wouldn't buy a pullback to 26.20. I would wait for it maybe to settle in a little bit, make a lower low with a diverging MACD on the 1 minute time frame, as I've outlined in that video, but on the MACD. But realistically, again, it's a high risk trading environment tomorrow, in particular around that 2:15 Eastern. So just be careful. The Nasdaq 100 was the winner here today, as I had mentioned. We saw that this market, Google was up big again today, as was Baidu. Apple gained nearly $3. And Research in Motion was up, close to $4. But this market, again, it broke past its 46 to 46.40 level. It's been holding above there. I think that 46.40 on any quick sell-off in here tomorrow, if we see it. I'm not calling that, but I'm saying, to try and predict what is going to happen, what the Fed is going to do. First of all, is one guessing game, and most people are pretty good at saying, what the Fed will do. But what is not predictable is the market's, and what's more important is the market's response to it. Does it, bring about a quick sell-off where buyers come rushing back into the market? If that does, I think that you want to pay pretty close attention down near 46.40 if it sells off hard. Looking at a shorter-term time frame, we've got this trend line that's been holding. This market's getting looking like it's getting a little stretched out, so we can draw that trend line one of two ways in here. I like to do it, off this, because it typically captures the essence of the trend a little bit more clearly. Hey, by the way, my book is going to be available here real soon. As soon as I get the details from the publisher in terms of when it's due for release, I'm going to post that to my blog. You can also see that I've been posting some of the early reviews from some of the people who reviewed it for me, so go ahead and take a look at that. Looking at the Nasdaq, though, resistance we've seen here just this week. Well, this was good to see, first of all, today, that the market took out yesterday's high. It hasn't taken out the high right here near 47.80 or so, and on the daily time frame, you can see we're still struggling with that downtrend line and just below the the level of that 200-day moving average, which is, again, of course, also just below the November and December lows that this market saw before the real big breakdown occurred. So, be careful tomorrow. High volatility and good opportunity to where your mistakes will be punished dramatically.